Hello everyone and welcome to the weekly market update from ICM.com. I am Wael Makarem, Market Analyst, and I would like to thank you for joining. So first we're going to go over the developments of the coronavirus, the recent developments in brief, and then we move forward with the economic calendar and top events for the week. And after we apply technical analysis on major currency pairs, gold, oil, and Dow Jones, and we end with questions. So first let's move with COVID-19 updates. So the total confirmed cases are almost at 3 million currently. However, we're seeing some optimism, especially in Europe and in the United States. So we heard recently that we see the hospitalization rate in New York City dropped for the 14th consecutive day, which is considered a very good sign. Also, the state governor, Andrew Cuomo, he mentioned that the state will reopen soon, but in phases. So they're splitting the opening or the reopening of the economy to phases. Georgia opened on Friday, giving some optimism for investors about things coming back to normal, which supported also risk sentiment. And it was clear in the stock market, we witnessed some good rally on Friday and today in stock indices due to some hopes over the reopening of the economy, and especially in the United States. Though some companies in Georgia, they prefer to keep their employees at home, so this should be expected for a while before things can get back to normal. Also in Europe, European countries and the United Kingdom, they will start unwinding soon the lockdown measures, but also they wanted to be sure that they are doing the right steps and they want to avoid any another breakout. So this is from Europe and the United Kingdom. Regarding the cures or the treatments, so recently we've been hearing some news about the remdesivir from Gilead, and we witnessed some optimism in the market 2 weeks ago amid the announcement that it could be compatible or could show some improvement in coronavirus cases. However, last week we saw some reports on reports accidentally published by the World Health Organization stating that Gilead's remdesivir failed to help some patients to improve in a study or clinical trials made in China. So this was a little bit of a setback. However, Gilead responded by saying that the trial wasn't continued and they weren't able to have some significant or reliable data. Also, the Food and Drugs Administration in the United States, they cautioned against the use of hydroxychloroquine and chloroquine. So this was a major setback and some positivity we witnessed earlier concerning cures or treatments for the coronavirus. Now moving to the economic indicators and what's a little bit most important this week. It is a bit busy week, especially with central bank action, which started today already with an announcement from the Bank of Japan that ramping up stimulus with pledge for unlimited bond buying. This is becoming the main norm currently. So central banks, they are going for unlimited bond buying in order to support their economies. This was expressed by the Federal Reserve a while ago, and also some other banks, they didn't go for unlimited bond buying, but also for huge amounts in order to support the economy or to combat the effects of the coronavirus on their economies. So currently, this week, there are two central banks meetings other than the Bank of Japan. We'll talk about them in a while. So first, we start on Tuesday with focus being on the USCB Consumer Price Index, which is expected consumer confidence, which is expected to fall to 88 in April versus a reading of 120 in March. So a major drop in consumer confidence in the United States. Also, the weekly oil report by the American Petroleum Institute, where we witnessed last week a crude oil stock reading was at 13.226 million barrels. Late on Tuesday, early on Wednesday, we have the New Zealand first quarter jobs report. Nothing much to look for. Employment change. Still, this is the major hit in New Zealand was in April, so and late March. So nothing much to look for. And the employment change, a rise by 0.3%, and unemployment rate a slight rise by 0.2% towards 4.2% from 4% prior. So nothing much to look for in these events. For Wednesday, we start early with the consumer price index for the first quarter from Australia, a rise by 0.2% quarter on quarter is expected versus a prior reading of 0.7. Also, the German inflation gauges, so we have the CPI, the WPI, and the PPI from Germany. So the CPI is expected to remain at to rise by 0.1% in April, similar to previous. It starts to get more excited when we go to the United States, when we approach the United States events or economic releases on Wednesday. There are numerous of indicators to be released. Especially the focus would be on the first reading of the first quarter GDP figures. So this is the first reading. There are expectations for a contraction of almost 4%. Some say 3.5%. Some economists expect 4.2, 4.4% contraction due to the coronavirus. So this is a major gauge to look for to assess the impact of the coronavirus on the US economy. So the first reading of the first quarter GDP to be released on Wednesday. Also the GDP price index quarter on quarter, expectation of a rise of 1.2% versus prior of 1.4%. Contraction in pending home sales in March by 10%, which is a huge figure. Also the weekly oil report by US Energy Information Administration, a rise of 15.15 million barrels, 15.150 million barrels is expected. It is good to focus on these numbers, especially currently after the latest developments on oil prices. There should be a focus on the inventories, especially that they rose to 518 million till April 17, which is relatively close to a record high of 535 million in inventories or in inventories in the United States, especially at the time where we are running out of capacity or storage capacity. So this is a good report to follow if you're following oil prices. And then we end the day with the most important event. Also, the Federal Reserve will conclude its two-day monetary policy meeting. There is nothing much expected from the Fed in terms of actions, especially that the Fed expressed its willingness to buy as much as needed in assets to support the economy. So this is in terms of action. However, in his presser, Jerome Powell would have to answer a lot of questions, especially about the Fed's further steps to be taken if we witnessed a further deterioration in economic indicators, or if the time span or the span of the virus will extend beyond expectations. So these are some of the key questions that Jerome Powell will have to answer. Especially also there will be questions about inflation after the huge amounts of stimulus pumped into markets, whether from monetary policy actions or fiscal policy actions. So these stimulus will also affect inflation. So these questions will be answered by Jerome Powell. So Wednesday, it's a big day. Also on Thursday, there's a lot of events. We start with China with the manufacturing and non-manufacturing PMIs. Nothing much to look for. Mainly things are getting back to normal in China. So a reading of 51.0 versus previous of 52 on the manufacturing PMI, while on non-manufacturing PMI 52.8, a little bit of a surge to 52.8 from 52.3. And then we go for the jobs reports from from Germany, where there are expectations of 76,000 and unemployment change, which is a huge number. Also unemployment rate rise by 0.2% to 5.2. And then we have the April consumer price index figures were a rise by only 0.1% year on year as expected, which is a very low number for the consumer price index. And also we await the first reading of the first quarter GDP from the Eurozone, where there are expectations of a contraction of 3.2%. So the first reading of the first quarter GDP from the United States and the Eurozone on Wednesday, on Thursday, they should be followed thoroughly by investors in order to assess the effect of COVID-19 on economy in the United States and in the Eurozone. Also, the unemployment rate from the Eurozone, an expectation of a rise by 0.4% to 7.7% from 7.3 prior. And then the European Central Bank interest rate decision. Also, nothing much is expected from the European Central Bank, especially that they announced the 750 billion euros in asset purchases in order to support the economy. Also, interest rates are a negative deposit facility rate, so there's nothing much to be done from the European Central Bank. However, if we witnessed last week leaders failing to approve a stimulus package of 1 trillion recovery funds to the Eurozone. So maybe this could push the European Central Bank into further action. So maybe we could be seeing the European Central Bank in expanding its pandemic emergency purchase program, the PEPP program, sorry, to support the economy, to support the Eurozone economy, and avoid some setbacks due to the coronavirus outbreak that occurred already. So this is from the European Central Bank. Also, we continue with the core PCE, the PCE price index from the United States, especially the main focus will be on the core PCE price index. A contraction or a negative 0.1 reading is expected for March. Initial jobless claims arise by 3.5 million claims. Last week we had 4.427 million claims. So almost the claims topped 26 million in the past 4 weeks. So this is a huge number. It raised all the job gains since the financial crash in 2008, which were approximately around 22 to 23 million jobs. Also, personal spending. It is clear the effect of the coronavirus, and the personal spending dropped by 5.0, contraction 5.0 versus prior reading of 0.2. Usually, personal spending ranged between 0.2 and 0.1 and 0.4%, but a contraction of negative 0.5% is a huge drop in personal spending. Also, the month-to-month GDP from Canada, but the February GDP, so nothing much to look for. Expectations offer growth by 0.1%. And finally, the Chicago PMI, Purchasing Managers Index, dropped to 37.9 from 47.8. So this is for Thursday. On Friday, Europe is closed for Labor Day. So mainly only focus would be on the manufacturing PMI from the United Kingdom. Almost a reading of 32.8, similar to the preliminary reading or the flash reading that came in at 32.9. And then we have the ISM manufacturing PMI from the United States, 36.7 reading versus a prior reading of 49.1. So this is also a significant drop in the ISM manufacturing PMI. And also we end the week with the US Baker Hughes oil rig count, which dropped to 378 as producers lowered production and shut down production due to the vast drop in oil prices, which forced them to ease their activity. So this is for the top events happening this week or top economic releases. Now we're going to go forward with some technical analysis on major currency pairs, gold, oil, and the Dow Jones. So we're going to move to the MetaTrader 4 platform. Okay, so if you have any questions, we'll keep them to the end. So we're going to answer everything at the end of the webinar. So first, we start with the dollar index. As we know, the dollar index, it's a basket of measuring other major currencies. Especially, it has a big weight of the euro and the pound, which account for almost 70% of the dollar index basket. So now we're witnessing we go for the weekly chart. We witnessed a huge reversal last week, so there was a rebound from April high, the high witnessed on the first week of April. So we had the rejection here. It's clear following a 2 week of gains, we had some major move down, and today it was a little bit rubbish for the dollar, and we saw some drop to almost raise all the gains earned last week for the dollar. However, now we're witnessing a little bit of a relief. If we go for the daily chart, it's clearer that we had a little bit a clear reversal from the high of witnessed on April 4 which was almost 101 level. So it's clear here we had a neutral candle showing a balance between buyers and sellers, and after we had another higher high on the week, and then we got a reversal from a higher high, so a clear reversal signal, and today the market went down. So this is for the daily chart. If we go into a closer look on the hourly chart, the market has been moving in almost three ways, a channel mode. So here we can see some little bit of a channel move here downside, and then another one, another also channel. So the market is almost moving in channels for the dollar. There is nothing much of a direction, clear direction. So we're moving in a channels and a small consolidation area between 101 and almost 98. So in order to move higher, we have to look for a break above this level, again above 100.50 in order to go for 101. And to look for targets, we're gonna draw the Fibonacci extension. So for 1336, if we can see here, the market is trading at between the 50 and 61.8% retracement. So we had a huge reversal from the 50% Fibonacci, almost the move, and then the coming next resistance could come in at 100.50, which is also the 76.4 or 23.6. It depends on the style you're drawing the Fibonacci retracement. And so these are the resistance levels: 100.4550, 101, the high, April high, and again at 101.50, which is the 1236 extension level. And for support, we have to look for a drop towards 99.30 and again at 99.80. And if we want to have like a closer another also range, we can draw a trend line combining the previous lows. So this could coincide here between Fibonacci level and also the trend line, which could come in at 99.30 for the dollar index. If we apply some of the major technical analysis indicators, so we go for it was clear that the market was finding some support near the 200-hour exponential moving average here, near the 200-hour exponential moving average one time, two times, three times, four times. So we got also buys from here, and the market was reversing from the from the upper band of the Bollinger Band channel. We're using the 20 the 20 period with two deviation. So this is for the dollar index. We saw the market going down breaking below the 100 and 200-hour exponential moving average. However, now we're witnessing some pullback towards this level. Maybe to look for some retracements here, it's almost 23.6, so we're reversing almost 23.6, and the 38.2 comes in at the 100-hour exponential moving average. So this is for the dollar index. For the RSI, we had a little bit of a divergence here in the RSI. We had a low and then a lower low, and also here in the indicator we had the low for the RSI and then a higher low for the RSI, signaling for a little bit of a divergence, and the market moved higher or almost around 25 points. So this is for the dollar index. To recap, we have to recap for the dollar index, you have to make sure to witness the 100.50 level, 100.4550, and again April high near 101, and again an extension of 101.45. And for support, you have to look for 99.60 and again at 98.83, and the lowest support comes in at 98.35. So this is for the dollar index. We move to the euro dollar now. Also, the euro dollar, it's completely the opposite. So we witnessed two consecutive closes to the downside. Although we had a little bit of a bounce near last week's high, which was a 1-month high for the euro dollar. If we get a closer look on the daily chart, we had a clear reversal day on Friday, and now today we're trading almost higher towards the 20-day exponential to 20-day simple moving average. So here we got some moves here for the 100. For the hourly chart, so it's clear also we found some resistance near 100 and 200-hour exponential moving average. So as we said, there's an inverse move between the dollar index and the euro. So completely opposite chart we're seeing here. However, here we witnessed a lower low for the euro dollar. So let me just remove some indicators to have it clear. So here on the dollar index, we failed to so which the euro dollar. However, in the euro dollar chart, on the daily chart, it's clear that we had a lower low. So we have to keep to keep a focus on 109.90. So if we weren't able to go for a higher high, then the market could continue moving lower, and maybe we could tackle the low of 106.25, 106.30 again. So this is for the euro dollar witnessing lower lows. So now we have to check whether the market's gonna be able to have another higher high, or maybe to stand to reverse here from these levels. If we can go have a closer look on the hourly chart, maybe this trend line could support us. So maybe another break above this trend line could be a little bit positive, with focus being again on 109.90, the level that we talked about. So keep in mind these levels, almost 108.70, 108.90 is also coincides with these resistance levels here found. So 108.90 for the euro dollar, and again 109.90. If we fail to move higher, then the market could retest this low of 107.30, almost 107.70. So this area here could be a support area between these two lines. I'm going to draw these two horizontal lines. So we could find some support maybe here, and then if these supports fail to hold, we could retest the low of 630. So especially we have to keep in mind that we have some good movers this week, especially on Thursday for the euro dollar. Let's move for the pound. We're trading in almost a consolidation zone. We had a higher high and then the market moved lower, failing to post a lower low. So we're trading in slightly consolidation zone here. We had some resistance, key resistance levels. So the market also is trading near them today, almost 10 pips away. So we had some selling pressure. The market, if we have a bigger look, last week on Monday and Tuesday we had a move lower, so it is clear on a weekly drop. But if we go for the daily chart here, we can see that the pair struggled to recover the losses incurred on Monday and Tuesday, but now today we moved a little bit higher on positivity that things can get back to normal in the United Kingdom as soon as possible. So this is for the hourly chart. Maybe we're trading here almost it's a channel, so we're trading in this channel on the pound dollar. So for a further move higher, we need to clear this area, today's high, and again 25.20 in order to rise again towards the high of 26.60 for the pound. And also on the downside or a negative scenario, we have to look for 23.30 and again at 22.40 towards lows of 21.65. So this is for classical technical. If we go for some of the indicators here, we can see that the Bollinger Bands, they were closer to each other as the market moved sideways. However, here we witnessed the bands diverging, especially as the market moved higher. But here we had also a little bit of a consolidation, and then the market started moving lower, testing the 20-hour moving average here and approaching the 100 and 200-hour exponential moving average. RSI was a little bit overbought in the morning, and now we're trading back towards normal levels between 50 and 60 zones. So this is for the pound. Let me recap for the pound. So for a positive scenario, you have to keep in mind 24.80 and again 26.40, and on the negative scenario, you have to keep in mind 23.30, 22.50, and again at 21.65. So this is for the British pound against the dollar. The dollar against the yen is still trading in this tight range that we talked about last week, though we're still trading here inside almost the past 3 weeks we traded inside this candle's range. If we go for a closer look on the daily chart, also nothing much. If you can see, like, we're moving in a really tight range, since the yen is also always used for as a safe haven asset, and currently also the dollar is being in demand when we have a demand for safety. So nothing much on this pair. If we have a closer look on the hourly chart, it is clear that here we had a bigger consolidation zone, and then we have a smaller one between 108 almost and 107.40. Now prices moved lower. If we remove these indicators, it will look more clear. So this level here, 107, 106.90, we have to keep it in mind, especially if we are witnessing we are expecting a move lower in the dollar yen. And also this level here could be a pivot point for the recent action, and this level could be the first level of resistance, 108.11. So here we got some support. It is clear that when the market moved towards the previous support, we had some major move up to around 30 points up from the previous support. So what we have to look for in a positive scenario, we have to look for a break above 108.90, and then to look for 108.70, which was the high here on the 31st of March, and then we look for 109.40. And in case of a negative scenario, we have to check to apply some of if we draw this Fibonacci retracement here, so we can see that the market here failed at 50% and the market here failed at the 23.6 or the 76.4%. We're trading between the 0 and 23.6 or the 76.4 and 100%. We're trading inside this range. So any break could mainly lead to a drop towards 105.70. If also we have some more expectations for the market moving in the channel, so maybe we can draw this channel here. So if we expect the market to move this way, maybe we could drop towards 105.70 in case we had some higher demand for the Japanese yen safety. So this is for the Japanese yen. These are the key levels. We go for indicators. So here it is clear that the market was trading in consolidation zone, trading between the 100 and 200-hour exponential moving average. Here we moved a little bit far away from them, and now the market the past 2 hours moved rally higher towards the 20-hour simple moving average. Also, the RSI was trading near 30 level, oversold level, and bounced back towards the 50 normal level. So this is for the dollar yen. If we go for the Australian dollar, it is among the top performers, especially that things in China, which is very crucial to the Australian economy, came back are going back to normal. So here, consecutive weeks of gains for the Australian dollar, approaching the 20-week simple moving average. If we go for the daily chart, it's also clear we're trading near the 100-day exponential moving average. We found some resistance here. The market moved back, and now we're retesting and trading above. Also, the RSI is aiming for a higher levels. If we go closer look for the hourly chart here, we're consolidating near the highest level since almost 6-7 weeks. We were able to break above the interim high that was around 64.40. So this is considered as a positive signal. We have to keep above this level, the 64.40. We have to keep above these trading above these two levels in order to support or to protect the positivity that that we are witnessing. However, here we can see some the RSI after posting a higher high on the hourly chart. So if we have a clear divergence here, so we have a high and we have another high, where the RSI also here we had a high in RSI but a lower high. So here it is almost a divergence signal for the Australian dollar. You have to keep in mind the 64.40 level, which we are almost 15 points away, 15 pips away, and also the 64.05 for a negative scenario. And for a positive scenario, we have to go for a little bit bigger time frame. So we have to look for this level here. It's almost the previous high, 64.60. If we draw, so here we're trading between the 50 and 61.8. We're trading above 61.8. Let's be aware of possible reversal here. So be careful. We have the first quarter CPI figures in focus coming also on the Australian dollar. So you have to keep in mind these levels for a longer or a bigger scale. We have to look for resistance near high of 66.60 almost. So it's almost 100 pips away, 210 pips away, and also we could find some support near 65.40. So this level here, if we draw the Fibonacci retracement, also it was support here, so maybe it could turn into resistance in the coming weeks, or maybe it will take we could witness this maybe in mid-May if we don't have any major movers for the market to rally around 200 pips. And from the bottom we have to look for the 62.60. So we could be range trading between this area in the coming month, so keep in focus. Canadian dollar, there's a here it's a clear reversal from last week's highs, and Canadian dollar, US dollar against the Canadian dollar. The market moved down despite we're losing also despite the move lower in oil prices going to negative. The Canadian dollar wasn't really affected in this move, so we didn't witness a sharp move in this Canadian dollar against the dollar. Here we have on the daily chart, it is clear that we're raising all the positivity earned on Friday. Also, if we have a closer look on the hourly chart, if you were with us on our last webinar when we talked about the classical technical patterns, the most recognized technical patterns, this could be a head and shoulder pattern where we had a higher high, but then the market failed to post another high. So we have to look for this formation. A key support zone is at 140 level. So this level should be watched out. If this is a real head and shoulder value, it is around 260 pips. So maybe we could get 200 pips move to the downside, maybe retesting these lows and even lower. However, we have to focus also on this trend line. If the market was able to break above this trend line, this could mean that maybe we can, if the market traded above this trend line, and then again above the previous high. The price could rally again towards this high of 141.80, and again 142, and maybe retest the highs of 142.65. So this is for the Canadian dollar against the US dollar. Watch out for this formation, follow it closely in order to know where we're going, because also on the bigger frame, if we have a look, maybe we have an inverted head and shoulder, this shoulder, and then a head, and then maybe here we're having a complex shoulder formation. So we have to keep in mind all the developments for the Canadian dollar in order to maybe we can draw some expectations also if the market is moving in a channel or in trading in a channel here. So maybe also we could, if this is a channel and this is a head and shoulder, maybe the market could rally towards these lows. So literally we could retest 38.50. So this is for the USDCAD. Let's move to gold. Gold prices are moving downside this hour. So faster drop towards 1705. This could be maybe we're trading something like this. So this is for the on gold. If we have a look on the weekly chart, it was a positive week last week. It was the highest close since almost 2012, which was positive, which is considered positive. This is a weekly close, so usually it's taken as a filter by investors. If we have a closer look on the daily chart here, with this on Friday, we had a neutral day showing a positive balance between buyers and sellers, and today we're moving lower, so this could be a negative signal. We have to look for the close today. If we go closer on the hourly chart, we were trading near the support level. The market traded below it a couple of minutes ago, so we have to keep in mind this level for support. You have to focus on this. So the market, if you can see, the market almost rebounded from this previous resistance, turning into support here. So 1702, you have to keep it in mind. Also 1661 as a further support, and for resistance we have to break above 1738. Any close above 1738, any daily close could be taken as positive, and maybe we could go to a fresh 8-year high on gold prices. So this is for gold. Nothing much, and we're trading in a corrective move here. So if we go for Fibonacci retracement here, the market is trading was trading near the 38.2%, between 20.6 and 38.2%. So here we moved a little bit slightly lower, finding some support near here. If we have to go for a deeper correction, maybe we go towards the 61.8, which comes in at 1692, 1690 level. So this is for a negative scenario for gold. You have to watch out for the 1702 level, and again 1690, and on a positive scenario, you have to look for a close above 1738, and maybe a move towards the first extension level, which comes in near 1757. So this is for gold on a positive scenario. Now let's move to oil prices. Oil prices recovered last week, trimmed some of the losses. So we were deep down last week towards $6 almost a barrel for the June contract. However, the trimmed losses towards the end of the week on a little bit of positivity as producers moved forward to cutting production in order to offset the drop in demand. However, we kicked off the week on a sharp move lower, and it's clear here the past hours, consecutive negative hours for oil prices on a much weaker scenario. You have to look for the 10 to 1050, almost 1020 support level, and again at 8.59, and for the $6.50 per barrel. So this is for support zones on oil prices, and for further positivity, the prices should clear, at least should clear above 1565 per dollar. The first sign of reversal, or first sign of positivity, maybe could come in at a break above 1340, or first sign of relief. And if this continued, we have to break above 1560 to be more positive, and then clear last week's high of almost 1880. It's not last week's high, but it's the highs reached following the correction. So we have to look for these levels for oil. So in a positive scenario, you have to look for a clear break above 1570 again, and again at 18. And for supports, we have to look for the $10, $8.5, $9, and the low of 650 per barrel. So this is for oil prices. Now we'll go for Dow Jones. A pretty good move for Dow Jones Friday and today. If we go for the weekly chart, on Friday, the the benchmark was able to recover some of the losses incurred, especially after a huge drop in oil prices, which moved down oil and gas sector, moving down also the investors, weighing on investors' risk sentiment. So this moved stocks lower. However, on Thursday and Friday, on Friday mainly, we witnessed some clear reversal, some clear move higher for the Dow Jones here on the daily chart. Is clear. This is Friday. This is the 2 hours difference between the server time and GMT, so it's not a daily candle. So a clear move higher for the Dow Jones. If we go for the hourly chart, also the market here is moving also in almost in a channel. So the market is almost moving in a channel higher, corrective moves for the Dow Jones. We have to look out for this for the high breached almost near 24,000 level, which was also the resistance cap, the move near on April 15. The next resistance could come in at 24,300, and if we're going to look for a more positive scenario, also we have to look for a break towards 25,000, 25,200. And on a negative scenario, you have to look for some maybe a drop a clear below these resistance levels. They could turn into support near 23,400, and again at 23,100 and 22,800, and the final support comes in at 22,250. So these could come and play if we witness some negative or some drop in stock benchmarks. If we apply some of the technical indicators, if we go for it's clear that the Bollinger Bands, they were moving far since the market was moving higher. Now we're in consolidation zone for the past couple of hours. So the bands are closing in at each other. However, the price is still trading above the 100 and 200-hour extended moving average. The RSI is still is a bit in the positive territory between 60 and 70. So it's moving towards the more buying trend. So this is for the Dow Jones. Maybe we could retest high of the upper band, which could come in near 24,000. So this is for the Dow Jones. You have to keep in mind there is a lot of corporate earnings coming this week. So also you have to keep on focused that they could affect investors' sentiment. So this is mainly it for the Dow Jones. And now we're open for your questions. So whatever questions you have, kindly write them down in order to answer them all. And if you want us to go over any other instrument, also please do write in the questions. Okay, sir. There's someone asking if they can get the full information. So we will be setting all this webinar will be published again on our social media channels on YouTube and Facebook, and also LinkedIn and Instagram. So you can look for it again. How can I trade with no risk? Corona time in the markets. Always, whatever thing you want to do, especially in the financial markets, there will always be a risk. But what matters the most is keeping your risk minimal. So always looking for opportunities with the highest risk to reward to risk ratio. So if let's say you're gonna risk $100, you have to make sure that this opportunity, if it was successful, it has to give you around 200 or 200, so 200 or 300. So you have to always look for 1 to 2 or 1 to 3 risk to reward ratio in the market. So if you have any questions or you want me to repeat anything, so please write that down. Euro dollar rank the next week. So sorry, we talked about the euro dollar. I didn't get honestly your comment. So the euro dollar, we're moving a little bit lower here. We had a little bit of consolidation. We have to keep in mind that there are a lot of indicators, especially on Thursday, coming out from the eurozone. Also, the European Central Bank monetary policy meeting. So you have to keep them in mind. In terms of technicals, we have to bear in mind that the market went towards a lower low last week. So we have to assess whether the market's gonna recover and go for a higher high. If it failed to go for a higher high, maybe we could have more pressure towards going for lower prices on the euro dollar. So this is for the euro dollar. Okay, so we'll stay for additional 5 minutes for any questions. If you have any question, just type it. There's on the panel that you can see, there's a question section, so you can write your questions in it. So there are questions about oil trojans recently. So there's a lot of pressure on oil trading, especially that a lot of liquidity providers, a lot of banks, they aren't offering trading on oil anymore. They restricted some of the trading activity, and they kept it to closed positions only. So you have to go for tougher charges and tougher deals in order to provide trading for oil. So this is not only for ICM, it is for oil trading around the world and not for only ICM. Okay, sir, you can find the video again on YouTube and our social media platforms. We will be publishing this video tonight or tomorrow morning, so you can go over it again. Okay, how to be a successful trader all time. Is it safe to trade on Monday? It depends on your trading strategy. It depends on what's happening in the market. It depends. Usually Monday is low volatility. So if you trade, if you have a strategy for low volatility, maybe a little bit. Yeah, you can't rule out that there won't be any breakouts. But usually the trading on Monday is less volatile, and usually in less volatile markets there's a higher chances of having more successful trades. So this is why on Monday some traders do prefer, some traders do only trade on Monday and Friday, since they believe they have less volatility, especially we're not of course talking about Friday where US jobs report are out, but usually they look for low volatility on Monday and Friday to trade to do some little trading with less risk. Usually high sessions of volatility, sessions of high volatility, they are encountered. They are also they have some high risks to trading. So it can be considerably, if you prefer trading in a low volatile medium, so it's preferably to trade on Mondays rather than Tuesday, Wednesday, or Thursday, where we have a lot of indicators coming out usually. How to be successful trader all the time. So there's no, you can't everything that you have to do, any type of investment you have to do, there's always risk, and there's always a place to lose. So there's always room for losses. So you can't going to be meaning that you're going to do profits all the time. Being successful is doing profits, but also incur some a little bit of losses, because this is part of the game. So losses are part of the game, and you can't put them out. So, but what you have to do is always to keep your losses little, have more profits. You have to increase your knowledge curve. You have to go over fundamentals, technicals, cover everything. You have to look from a retail perspective and from a corporate perspective, so in order to cover the bigger picture. And once you do this, you go for implementing this by doing proper risk management techniques. You have to go for to look for opportunities where you can guarantee a high risk to reward to risk ratio. So you have to look for risking one and getting a reward or two or three. So that's what you have to look for in order to raise your chances of being successful in the market. Well, depends on there is nothing called the best indicator, and you have to get to know something, that there are a lot of ads that you can go over on the internet. They say this indicator is the best, and it's the best indicator, and that you can make money. There are two different concepts in trading. One is called consolidation trading or range trading, and the other is breakout trading. So in the breakout trading, there is certain indicators that could support. There are trend indicators. And on the other side, when the market is moving in range, these trend indicators won't perform properly. So what you have to do is merge between these two, merge between having using proper indicators when you believe that the market is gonna go in a trend, and use the proper indicators when you believe that the market is gonna trade in a consolidation. So what you have to do basically is make an assumption whether the market is going to move in a trend or the market is going to move in a consolidation. Once you are able to identify this question or this scenario whether the market is going to move in a direction or in a consolidation range, you can apply the indicators that you want. So even a simple indicator that we're going to talk about on Wednesday, the moving averages or moving average convergence divergence, we're going to talk about them in the Wednesday webinar. If they are trend indicators, so when you are using them when the market is moving in a trend, you get perfect results. But if you use them when the market is moving in a consolidation, you won't get some good results and your trade won't be successful. So there is nothing called best indicator for the market at all the time. Yeah, of course, we will continue webinars after Corona too. So we will always have this hopefully Monday weekly update, and on Wednesday it will be always educational webinar. What size of the moving averages on my chart? So on this chart here, you have we have 3 moving averages and not 2. Uh, there's the one in blue, which is the 100-hour exponential moving average. There's the one in red, which is the 200. Here's we're using the daily chart. So here's the 200 period, the 100 period, and you have also these are exponential moving averages. And here we have the simple moving average, which is also the middle band of the Bollinger Band. So we're using 20 period of 20. So this is the 20 simple moving average, this is the 100 exponential, and this is the 200 exponential. Usually traders do use 50, 100, and 200. So basically it came from the idea that 200 days is for it interprets proper move for a year, and then the 100 is for semi-annual, and the 50 is for a quarter. So this is where it came from: 50, 100, and 200. Thank you so much, sir. We appreciate it. Any further questions before we end this webinar for today? So I just need to remind you that all this information available in this webinar are just for educational purposes, and they shouldn't be taken as signals or advices for trading. This is all for increasing your educational level or educational curve, knowledge curve, in order to help you perform better in the market. So this is just a kind reminder about the content of this webinar. Any further questions? What stop loss pip size is the best for forex market? There's also this question. It can be answered. There is nothing called perfect stop loss because it's different. It's always going to be different. Well, if we are trading currencies, if you are trading commodities, if you are trading stocks, if you are trading indices, so it's always different. It's going to be different, especially if you're. It will also depend on your time horizon for trading. So for example, you're a scalper, your stop loss and profit size will be different than the ones who are looking for holding a trade for a week, for a month, for a day. So it's too generic to set, and especially it's not always about a certain size that can be used to all. Usually base your stop loss on certain price levels available on the charts where you believe that these price levels are important to traders, whether to buyers or to sellers, and they will do they are significant levels in the market. So there is nothing called perfect or best stop loss pip size. So it will always try to always base your stops on certain on certain technical analysis levels available. Okay, last question. Okay, perfect. Then we're ending this webinar now. Hopefully on Wednesday we'll have another webinar, educational webinar, to talk about the moving averages, how to use moving averages, how to interpret their signals, getting the best out of moving averages. Also, we'll talk about the moving average convergence divergence indicator, which is a well-known and used indicator and the forex trading and then forex trading or in trading in general. So make sure to register for webinars educational for Wednesday's educational webinar, and that's it. Thank you for attending. Hope you're all staying safe, and hopefully we'll be in touch in further and more seminars to more webinars to come. And thanks again.